All right, morning everyone. Let's kick it off. All right, so start with last night's sessions in the States. Once again, non-event. 0.25% move in the S&P. We got 0.3% move out of the Nasdaq, almost 4/10. Yeah, but once again, just a drift. I mean, we kind of got drifted up to those levels after the first hour and a half of trade and moved sideways in a range not bigger than maybe 2.5, 3 points on the S&P. So it's incredibly frustrating, the lack of volatility that we've had of late, the lack of volumes. Market's very indecisive, and I think until we get a catalyst, we're stuck in this position for a while. I think that we had PMI numbers across the globe yesterday. That was obviously very important. The U.S. PMI number missed. The PMI numbers as a whole out of Europe, I mean, Germany was a little bit soft, which is obviously the main one. China was a little bit soft yesterday. So globally, I think the big boys didn't come in with great data, and you saw that in Treasury prices yesterday in the States. You saw that in bond prices elsewhere. And we saw yields started to drop again, expecting obviously the stimulus gas pedal to stay on for a little bit longer. We did have oil yesterday, which jumped. I would assume that the jump in it yesterday, I mean, the inventory number was the day before, so I wouldn't think it had anything to do with it. I think the boost in the oil prices yesterday came out of renewed tensions out of Russia and the Ukraine. We had separatists kind of upping the ante again yesterday. I think about 7 or 8 people, at least 7 or 8 people critically wounded. A few people were killed. And they're saying that that tensions have really stepped up again very suddenly. So I think that's the reason we probably saw a bump up in oil prices there yesterday. If we see what happened in Asia overnight, we had Australia, which was basically flat on the day. Nothing really leading there, but we had Shanghai and the Hang Seng, which were very strong today. Shanghai up over 2.5%. The Hang Seng up over 1.5%. After we had 3 out of the last 5 or 6 trading days in Hong Kong, where you had a stock that was down, a major stock that was down 25+%, and it didn't really hurt the index. It's just what's so amazing about what's going on right now over in China. I mean, that kind of thing where you have one of the biggest companies with Hanergy coming out and dropping 40% or 40-odd% in a day and wiping out that kind of size in the market cap. I mean, it is one of the bigger market caps there, and it hardly affected the index. It didn't really affect the confidence in the rest of the market, and you had the exact same thing happen the next day with Golden Properties. And so the fact that the market's been able to sort of shake those things is spectacular, and just goes to show that there's a lot of resilience there. All right, let's move on to the chart of interest. I really think this is a really interesting chart. This shows the sell side divergence from analysts, okay? And this shows the divergence or the correlation in between the analysts from different houses, okay? And it basically shows you when the deviation from the analysts starts to get smaller and smaller, as you go out into a bull market. At the height of the bull market, the deviations are the absolute smallest. And we are literally at the absolute smallest that we've been since 2001. We're also the smallest we've been since, and close to about 2007. It's unbelievably spectacular when you look at that chart. And it just shows you that, and what the comment was in the article is that the analysts are all herding together. Everybody's kind of looking at the same thing. They're all talking about the same thing. And when you get everybody kind of leaning on the same foot, and the ranges get so narrow, it becomes obviously increasingly more dangerous. So we've actually turned up off of the lows from that. The lows coming, last quarter. In terms of that, and when you look at it historically, this is not a bullish sign for equity markets. So just just keep that in mind. There's a lot of these kind of, you know, warning signs, I think, that have been flashing in the markets over the last few months, and they're not great timing indicators in the short term, but I think in the long term they're big warning signs. When we look at corporate action this morning, we had Richemont that was out with full year 2015 numbers. We have headline earnings per share basically coming in line, a little bit light on revenue. The divvy was a touch better. I think if I can just throw out a quick note, I think that the sales numbers were a little bit soft, and we've just got to keep that in mind that you know, you're probably going to see a little bit lower open. I think I saw here on the Bloomberg terminal Julius Baer calling Richemont down 1.4% on the open, so not a big not a big correction, but a correction nonetheless. But I think it's a mild miss, let's put it that way. Mr. Price, we're also looking to come out today as well, so have a look at those numbers and the expectations. We're looking for guidance of around 20% on headline earnings per share, so just keep that in mind. All right, moving on into market data, we've got German GDP, or we had this morning, at 3.3%, came in line with expectations. We've got a IFO business climate, current assessment, and expectations numbers coming out at 10. Those IFO numbers have been really nice numbers to trade off of late, and then we've got US CPI coming out today at 2:30. All right, let's get into the maps. First thing that I wanted to have a look at this morning is Discovery. We're going to go heavy on the insurance or the medical side. I'm lumping them in on the medical sector side. Okay, sorry, we're at a 2-year here. Let me just zoom this forward so you can see it a little bit better. So Discovery, we dropped trend support the other day at around 125-ish. We came down, we came back up and retested this here yesterday and the day before around 128. Weren't able to really break through, and now we're kind of starting to turn back down to the downside. I think this recent low would need to hold. That's at about 122 and a half, somewhere in there. If that recent low drops, well, I think 120 is the major level here. So let's just throw that out first of all. We drop 122, we'll obviously probably come down and test 120. And 120 to me is the major level. If we drop 120, then things could get a little bit more uncertain. We'll probably at least come down and test the 200-day moving average. But watch this one closely. I think the market likes this one. It's going to like to get a nice pullback in this, so guys can jump back in. All right, Standard Bank. I'm going to take this down to a 1 year here. This thing's actually looking a little bit head and shoulders, and some of the banks are starting. I mean, it's not classic by any means, not well defined. But just look at the setup here. I think if we were to drop the lows from the other day, which were at 66.60, then this could start to look a little bit more negative. Maybe come back and fill the gap from when we really broke up from, closer to maybe somewhere down on those lows. That let's give us a target maybe down around 157 if we pull back from there, or if we drop the 2 days ago lows or 3 days ago lows. All right, the next one we're going to look at is Remgro, which has been a real heavy underperformer of late. I don't know if it's due to their up in the stake and what is it, Grindrod to 25%, but this thing's definitely been under pressure, hugely underperforming the market. I mean, you should see this thing normally as a barometer of the market. We dropped 260 support, however many sessions ago, but right now I think we're at the last real level of major support, and this is support on the trend line, as you can see, support on the 200-day moving average as well. We're perfectly set up on both of those levels at the moment, so watch this one closely. If we start to turn up from this, I would like to see us move above 260 for us to really start to get conviction on the long here, but quite critical level for Remgro there. Next one I'm going to show is MediClinic. All right, so MediClinic, let's zoom it a little further forward. MediClinic, you can see here, we really broke down the other day below about 119, came back up and got above it on, what was it, Tuesday's close, or Wednesday's close, in fact, Yesterday on earnings really got absolutely hammered. They are under pressure out of some of the recent Swiss regulations that have been put into place. So I think last year they grew at about 45%. This year they grew at 9%, which is a bit of a dramatic turnaround in terms of growth rates. Share got punished hard yesterday, down about 7% if I'm not mistaken. And I think we got to look for the height of this channel, which, you know, at the very least is $10. I think you can look for a little bit more than that. Let's call it, let's go in the median. Let's say $13 a downside from 119. So yeah, I mean, we may come down here and test the 200-day at around 106. I think that's kind of where the target would be. And the last one that we're going to look at, similar stock in the sector here, we're going to look at Life Healthcare, which dropped major supports, 2 weeks ago or a week and a half ago, around 40. Really collapsed hard. We traded down to $35 intraday. We rallied back up, tested, I think, more or less resistance up here around 39.80, and we reversed hard yesterday. We reversed pretty hard, heavily with MediClinic. I have a feeling this thing may be able to see lower lows. For me, the target is quite far down. I think the target's down here in the low 30s, and so I think there's still some meat left on the bone, maybe on the short side out of Life Healthcare. And that's it for today, guys. Good luck out there.